Moving on, the standard class tells us that an asset will be identifiable if it is separable or if it arises from a contractual or other legal rights class. Okay, so paragraph 12 could be a good source for a multiple choice question class, uh, framed as a true or false question, really. Okay, so make sure to take note of paragraph 12. An asset is identifiable if it is separable. That is, if it is capable of being separated or divided from the entity and sold, transferred, licensed, rented, or exchanged either individually or together with a related contract, identifiable asset or liability, regardless of whether there is an intention on the part of the entity to dispose or transfer the asset class. Okay, as long as it is capable, does not have to be the intention of the entity. Second, if it arises from a contractual or other legal right class. So very understandable. Okay, so understand that the primary difficulty in intangible assets class is as regards its identifiability because we cannot see it, we cannot perceive it. Okay, but we are able to enforce such a right. We are able to enforce the right over this intangible assets class. Okay, if it arises from a contractual or legal right. Okay, so it's separable or arises from a contractual or other legal right class. Okay, if it is separable class, then it can be very easy to identify it because we could not sell or transfer it class if we cannot identify what we are selling or transferring. Okay, but if it arises from a contractual or legal right class, then it would be very easy to enforce it, and therefore there will no longer be an issue as to its identifiability. Okay, an important component also on the recognition of intangible asset class would be as regards control. We say there is control if the entity has the power to obtain the future economic benefits flowing from the underlying resource and to restrict others to those benefits. Okay, if you'll notice, class, this is similar to the definition of control provided in the conceptual framework. Okay, as to the concept of control, class, it has not changed even though we have a more recent uh, version of the conceptual framework. Okay, but very important caveat here, class. Legal enforceability of a right is not a necessary condition for control because an entity may be able to control the future economic benefits in some other way. So just take note of this one, class. Okay, legal enforceability is not a necessary condition for control. Okay, paragraph 14. Market and technical knowledge may give rise to future economic benefits, but again, there will be an issue as to how we are able to control the economic resource, so it may not always result in the recognition of an intangible asset. Okay, but if an entity controls those benefits, class, okay, if those benefits, if the knowledge is protected by legal rights such as copyright, a restraint or trade agreement, okay, or a confidentiality agreement, then such knowledge may result to the recognition of an intangible asset class because it allows us or grants us control because these agreements will grant us control over the future economic benefits. Okay, but as to the amount you expend to train your staff, class, it would be very difficult to treat it as your own asset class because an entity usually has insufficient control over the economic benefits arising from a team of skilled staff and from the training for these items to meet the definition of intangible asset. If you spend resources to train your staff class, the control aspect as to the benefit of those expenditures, class, would be very difficult to establish. Okay, so basically, class, the other parts of these paragraphs, class, under control would give you different scenarios as to whether or not the entity can recognize an intangible asset. So understand that it's possible that the examiner will be picking out certain parts of these provisions, class, and you would be asked which of the following can result in the recognition of an intangible asset, which of the following embodies control, which of the following does not exhibit control. So just like in paragraph 16, an entity may have a portfolio of customers or a market share and expect that because of its effort in building customer relationships and loyalty, the customer will continue to trade with the entity. Okay? But really, you do not have control over your customers class. You cannot force your customers to just buy from you. That's what makes it difficult to establish control over those expenditures, thereby making it not possible to recognize them separately as an intangible asset. Because if you'll notice, class recognition criteria would just be it will have to meet the definition of intangible asset and the recognition criteria provided in paragraph 21 and 23 to 23. And if we'll see here, class, the criteria provided here for paragraph 21 and 23 are not new. This is very common. Letter A, it is probable that the expected future benefits that are attributable to the asset will flow to the entity. And letter B, the cost of the asset can be measured reliably. Okay, at this point, you should already be familiar with probable and measurable requirements. Okay, so this is not entirely new. We have also a similar provision for PAS 16. Okay, so basically, intangible asset would differ from PPA as regards the absence of physical substance class. Okay, so the requirement applies to costs incurred initially to acquire or internally generate intangible asset and those incurred to add add to or replace part of intangible asset. This part class is also similar to your PAS 16. Moving to paragraph 24 class, very important. This should be one of your most important takeaways class, and I hope uh, the videos you prepared to whoever is assigned for PAS 38 would have emphasized that intangible assets are initially measured at cost. Very important concept class. This is one of the things that you should be carrying with you as you move along to your intermediate accounting classes. Intangible asset is initially measured at cost, and you'll notice that this is the same rule for the initial measurement of your property, plant, and equipment as provided in PAS 16. Okay, so as you do your reading for PAS 38 class, please take note of the similarities between this and between the provisions in PAS 38 and PAS 16. Okay, as to the rules on separate acquisition class, very similar for PAS 16. Okay, the purchase price and directly attributable cost, again similar. Okay, even the examples of directly attributable costs are similar to PAS 16. And also costs that are not part of that will not be capitalized, similar to PAS 16 class. So you would really see a lot of similarities between PAS 16 and PAS 38. Even as an acquisition as part of business combination, this would also be the same